Another step on the way to recovery for Greece. Just an hour ago, word that its 10-year note sale is underway. Yields have risen, the spread over German bonds has widened, and the euro is lower. Randolph of IHS Global Insight is joining us from London. Does that mean it's not a success, or is this buy the rumor, sell the fact?
Well, I think the Greeks recognize that they're going to have to pay a higher yield, what we used to call a country risk premium, in order to get away with the auction. There is demand out there. The question is, at what price?
All right, it looks like they're going to price just under 7%. Does that suggest to you that investors are growing more confident about Greece's prospects? There was talk they would have to go to 7 or more to get this sold.
Yeah, I mean, you know, it's always an interesting question. The markets are now applying what we call a market discipline on those borrowers, in this case sovereigns, that deem to be less creditworthy. The real surprise is why they didn't do this during the boom years. They virtually ignored the credit fundamentals, the differences between Germany and Greece, for example. But now we're in a different situation. You know, central banks around the world are taking the first baby steps to withdraw their accommodation, and the bond markets are waking up and saying, okay, where are we going to recalibrate risk everywhere, including with sovereigns? And Greece is very much in the frame because of its public finances, but also because it has the weaker credit rating. And there's the risk that, you know, it may not be able to refinance itself with its weaker collateral.
Big risk issue tomorrow as the Greek Prime Minister meets with the German Chancellor in Berlin. Now, a lot of people are saying this is not just an issue for Germany and for Greece, but for the future of the European Union and the ECB.
Absolutely. You can draw very interesting historical parallels with the creation of the United States back in the 19th century. We are at that historic inflection point or crunch time with regard to the European monetary project. In a sense, the markets have spotted a fault line within the European monetary project. You know, what is the depth and nature of solidarity that exists amongst these Eurozone countries, and at what level of support can be given? Quite frankly, I think, you know, unless the ECB is given IMF-type powers to lend in a measured way against policy action, that fault line will remain.
And you think that that's at all likely?
Well, it's very interesting that not all the cards are with the German government or the bond markets. Greece does have an option to turn to the IMF should it want to. It will probably say to Angela Merkel tomorrow, it says, look, we've done all we can. We've taken the extra fiscal measures. We're bearing the pain. We are serious about rehabilitating our economy. There's no turning back to the old ways. But where's the European side of the bargain here? And they could always say, well, you know, if we don't get the support from the European Union and the Eurozone governments, then we will turn to the IMF. And that's hugely damaging for, you know, European credibility.
All right, that meeting tomorrow. Randolph of IHS Global Insight, thank you for being with us from London this morning.